The world's most influential policymakers are joined by the biggest names in business here in Davos, and another one is with us now. Barclays Chief Executive Bob Diamond. Bob, always good to see you here in Davos. This place, the World Economic Forum, tells us an awful lot about the way bankers look at the world. A couple of years ago, they were sort of in a state of shock, fear. Many of them didn't show up. Last year, a bit of a different story. This year, they seem to be walking around with a bit more swagger. Why?
I don't think there's swagger, Eric. I think there's focus and intensity. I think, in the finance governors group, which meets later today, what we're really focused on is how do we run our businesses in the new environment, the new paradigm, in the new post-Basel capital world. So I think there's a lot of focus, a lot of intensity, and I don't think there's any swagger at all.
Well, I've heard from some of your fellow bankers a distinct message. And it's a message directly to regulators and politicians. Don't overreach, don't overregulate, because if you do, you will make it impossible for banks to extend credit, and it'll cost the world economy growth. So if you're not growing fast enough, you can blame only yourselves. Is that a message you share?
I think there's been good balance in Basel. I think you and I have talked about this before. I think it's been critically important that it's been embraced across the G20. We've never had capital rules consistent across the G20. I think what we would like to see is certainty, and we're not going to see certainty right now. We have the Independent Commission on Banking in the UK. We'll make their recommendations in September. We still have decisions to be made by the G20, and the FSB around SIFI capital, if there is, what levels. I think in an ideal world, we'd like to have certainty so we can move on, but we're not going to have it for a while.
But regulation this year can't be your biggest fear. It must be something about restructuring, about the way that the economy is growing, and certainly that how the Eurozone isn't growing.
Well, I think it's really a mix. In the U.S. right now, there's a lot of optimism. I think the stimulus, both on the monetary side with zero interest rates, with the amount of quantitative easing, I think it's something like $1.7 trillion. Yeah. But also on the fiscal side, in addition to the original stimulus during the beginning of the financial crisis, we've now seen an investment tax credit. We've seen an extension of all of the Bush tax cuts. And most recently, we've seen renewed confidence with the administration and the White House working much more closely with business. And I think that's the attitude that we need to have in the UK and Europe, which is one of more confidence, and get the banks and the private sector working together. We're not going to see growth coming from the public sector in the UK and Europe. They're addressing the spending issues, the deficit issues, the debt issues. The growth is going to come from a healthy, confident private sector, and that's where we're going to get jobs, and that's where we're going to get economic growth.
Bob, let's go back to that independent commission for a moment. What would it mean to your bank, what would it mean to your shareholders if UK regulators force British banks like Barclays to break apart?
Listen, we have respect for the process. The government has asked Sir John Vickers to chair this commission, and we're certainly not going to put ourselves in his shoes. He gave a very good speech over the weekend at the London Business School. It's a thoughtful process. Sir John has been reaching out and getting input from banks like us, but also from people around the UK. The best decision in terms of desirability and practicality is what will be recommended, and we feel very confident that the business model of Barclays, the integrated universal banking model, is safer and sounder and better for jobs and economic growth. So we're confident that this will come out in the right place.
But you don't want to be split up.
Of course we don't want to be split up, but I think what Sir John said over the weekend is that's not really one of the options.
I think it's safe to say that many people here, in fact, even though they're much closer to the banks, don't trust bankers as much as you might like. What can you do as the CEO of Barclays to inspire more confidence in what you do, to trust you?
Yeah, Eric, it's a very fair question. And I think as an industry and as individuals, we have not done a good job of explaining to society, explaining to the communities in which we work, how we add to their quality of their lives, how we add to jobs and economic growth. It's something that is important for us to do. And we need to regain the trust of the public.
How do you do it?
Well, I think that's really our focus at Barclays. We have a business model that we think is terrific and has served us well during the crisis. We're very clear on what our strategy is. Our plans going forward are all about execution. And execution, to me, means delivering on the promises that we make around capital, around how we build returns, around how we service our customers and our clients, and also about how we become better citizens of the communities in which we work. And I think one of the exciting things is that this is about execution. It's about the whole organization driving together to deliver on our promises.
Bob, let's take a look for a moment at what we heard from your U.S. competitors the last few weeks. Trading activity in the fourth quarter was mighty subdued relative to what we saw in the earlier part of 2010. To borrow a phrase from way too many people, is that a new normal for 2011? Are we going to see that level of client activity, or is there some reason to expect it to pick up?
Our results don't come out until February 15th, both the full year results and the fourth quarter. But what we have said publicly, and what I can repeat before the results come out, is we actually saw pretty good flows in the fourth quarter, particularly in December. I mean, December also often the business begins to close down. The advisory calendar, the equity calendar were both terrific. And coming into this year, we've never had a pipeline of business in both advisory and equities as strong as we have in 2011. So
are you taking share from the firms that didn't do so hot? Are you taking share from Goldman Sachs? Are you taking share from Citigroup?
Listen, we are very confident in the business model, but I will, since you asked about share, mention one thing. You know, since the acquisition of Lehman, we've now been in the advisory and M&A business, which we had not been before. In 2010, we're number 2 in the U.S., so Barclays number 2 in M&A, announced M&A in the U.S., and number 4 globally. That's a terrific position for us to be in. Long may it last, by the way, and we have a lot of work to do to solidify that position, but it's been a great addition to our business.
All right, Bob. Always a pleasure to see you here in Davos at the World Economic Forum. Thanks for joining us.
Bob, thank you.